This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil fell on Monday, giving up an earlier gain, as a cyber-attack that forced the shutdown of major fuel pipelines in the United States was countered by rising COVID-19 cases in Asia that raised demand concerns. Colonial Pipeline said on Sunday its main fuel lines remained offline after the attack that shut the system on Friday, but some smaller lines between terminals and delivery points were now operational. The bullish developments in the US are hiding a worrying COVID-19 trend in Asia, said Louise Dixon, analyst at Rystad Energy. If the pipelines come back online quickly this week, the market may be in for a price correction that will make the impact of the pandemic's spread in Asia more visible.
The Asian Development Bank will no longer finance coal mining or oil and natural gas production and exploration, it announced in a draft policy statement on Friday, a move welcomed by environmental groups, which said it was a decade overdue. The Multilateral Development Bank, which focuses on eradicating poverty in Asia, provided no timeline for its commitment. It also laid out conditions under which fossil fuel projects would continue to receive funding, such as where no other cost-effective technology was available. Yangping Zhai, head of the ADB's energy sector, said the draft would be deliberated by its board of directors in October.
Moving on to the top news in the energy sector.
The U.S. government and the top fuel pipeline operator in the United States on Monday worked to secure the network that transports nearly half of the East Coast's fuel supplies, as the group suspected of a ransomware cyberattack that caused it to shut down last week said it was just trying to make money. The attack on Colonial Pipeline is one of the most disruptive digital ransom schemes reported, and the resulting shutdown has disrupted fuel supply across the eastern United States, triggering isolated sales restrictions at retail pumps and pushing benchmark gasoline prices to a 3-year high. A news release issued on Monday in the name of the cyber group DarkSide, the group suspected of the attack on the pipeline, said, "Our goal is to make money, and not creating problems for society." Its statement did not mention Colonial Pipeline by name.
Hedge funds boosted their position in petroleum for the fourth week running, as bullishness about oil consumption and prices rebounded after the setback in March. Hedge funds and other money managers purchased the equivalent of 40 million barrels in the 6 most important petroleum futures and options contracts in the week to May 4. Portfolio managers have bought 102 million barrels over the last 4 weeks, reversing sales of 113 million barrels between the middle of March and early April. In the latest week, there were purchases across the complex, led by NYMEX and ICE WTI, plus 14 million barrels, and Brent, plus 11 million, but also European gasoil, plus 7 million, US gasoline, plus 6 million, and US diesel, plus 1 million.
Next, we have the top news in metal markets.
Shortages of copper and dwindling inventories are likely to propel prices of the industrial metal to levels beyond current record highs, unless scrap supplies rise significantly. Benchmark copper on the London Metal Exchange hit $10,747.50 a ton on Monday, surpassing a record of $10,190 hit in February 2011, for a gain of 37% this year. The copper market is tight, inventories are trending lower. There is a risk that prices of the red metal spike to $13,000, said Bank of America analyst Michael Widmer.
Mining companies need to invest nearly $1.7 trillion in the next 15 years to help supply enough copper, cobalt, nickel and other metals needed for the shift to a low-carbon world, according to consultancy Wood Mackenzie. The United States, Britain, Japan, Canada and others raised their targets on cutting carbon emissions to halt global warming at a summit in April hosted by U.S. President Joe Biden. Meeting those targets will need large-scale deployment of electric vehicles, storage for power generated from renewables and electricity transmission, all of which require industrial materials, such as lightweight aluminium and metals used in batteries such as cobalt and lithium. We will now look at the top news in the agricultural sector. Brazilian agribusiness consultancy Agrural on Monday said it cut its production estimate for Brazil's second corn crop in the center-south region due to a prolonged drought that worsened in the first week of May. Farmers there are now expected to reap 65.1 million tons of second corn, down from 73 million tons estimated on April 19, according to a statement. At the same time, Agrural said average yields are now seen at 84.160 kilobags per hectare, the lowest in 3 years. In the whole of Brazil, Agrural said second corn crop production will be an estimated 69.6 million tons, compared with 75.1 million tons in 2020.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.